Gold hit a 5,600 all-time high in January, then dumped 20% the moment Iran tensions escalated, the exact opposite of what consensus expected. The back end flagged that as a textbook divergence. We closed today on the system's #1 ranked stock and ETF from Best of Best. SPX closed Monday at 7,406, up 22 points after the Nasdaq's nearly 5% Friday dump. Both indexes printed inside day candles, which the system reads as indecision, neither a confirmed bounce nor a break. The VIX is pricing in an 85% probability of a sell-off in SPX or NDX by Tuesday or Wednesday, and the 4.57% 10-year yield keeps the macro ceiling low. The 10-year is parked at 4.57% after a 172,000 jobs print pushed December rate hike odds to 70%. The 30-year touched 5.16%, the highest readout since the run-up to the 2008 financial crisis. TLT broke below the $84 support level, and dollar-yen is back at 160, which has historically put Bank of Japan intervention back on the table. Energy is the lone sector leading the board. XLE clocked in as the top S&P sector today, with WTI holding the 84 to 88 structural floor on renewed Iran-Israel strikes. The broader picture the system ingested: crude is up roughly 80% year-to-date, and forward CL futures near $80 signal the current bid is geopolitical premium, not a demand story. Gold broke below its 200-day moving average near 4,300, a bearish technical marker the system doesn't pass over. Here's the divergence. Gold hit an all-time high near 5,600 in January, then fell roughly 20% when the Iran conflict broke out, the opposite of what most people expected. Silver is holding relative leadership, but with Treasury yields around 5%, institutional capital has been rotating from metals into bonds, and that flow is the chart's headwind right now. The international picture is split right now. DAX and CSI 300 are holding uptrend structure near prior leadership, higher highs and higher lows still intact. Export-heavy Asian markets absorb concentrated risk-off pressure on Friday without a clean floor printing. Dollar-yen back at 160 puts Bank of Japan intervention risk back on the table. And that variable adds noise to the entire Asian picture. Bitcoin's holding near 60,000 on session, but the structural read is bearish. The scan picked up a 200-week moving average breach at the weekly lows, one of the more historically significant technical events in a crypto cycle, plus over $4 billion in ETF redemptions. The coin is down nearly 29% in just over 4 weeks, and roughly 53% from its cycle top. The lower low structure says the trend hasn't turned. Here's the best readout. The system filtered down to 59 ranked symbols today. X, L, K, AI, Q, and LSTR are on the shortlist. The next two scenes zoom in on the #1 ETF and #1 stock from that output, ranked by the system straight from SignalFinder Pro. Technology is running point on the sector board. XLK is ranked #1, up 2.15%. Industrials slot in at #2, but slightly negative, down 0.32%. Materials is #3, down 1.32%. The gap between XLK's momentum and everything below it is notable. The strength is concentrated at the top, not broad. #1 ETF from Best of Best AIQ, the Global X Artificial Intelligence and Technology ETF, up 3.09% to 64.45. That's the system's top ETF rank out of 59 shortlisted names today. AI and tech momentum is concentrating in a mixed macro environment. Check the signal state live inside SignalFinder Pro for the full technical picture. The top stock from Best of Best is LSTR, Landstar System, up 3.35% to 225.37. Freight logistics at #1 out of 59 ranked symbols in a risk-off session. That's a divergence worth noting. Check the signal state inside SignalFinder Pro to confirm the full structural setup. That's the full system diagnostic for today. Yields are elevated, 10-year at 4.57%, 30-year at 5.16%, the highest since 2008. Indexes staged a tentative bounce but printed inside day indecision candles. Energy leads. Gold is below its 200-day moving average. Bitcoin confirmed a structural bear market with the 200-week breach. Best of Best narrowed to 59 names. AIQ tops the ETF list, LSTR tops the stock list. And remember, this is educational, not financial advice. Do your own homework.